Hello and welcome to Help Me I'm Poor, the money podcast that's more Manolos than market fluctuations. I'm Claire.
And I'm Ellie, and each week we discuss how money shows up in some of our favourite pop culture, from the classic to the nostalgic to the contemporary.
And we are very much in nostalgic zone at the moment because we are doing a Sex and the City mini-series. We're doing a special bonus episode today with a special guest who you'll recognise if you watch season 1, and we will introduce her in just a moment. But we're doing a deep dive on one episode in particular from Sex and the City, which is season 6, episode 1, To Market to Market.
So this episode kicks off season 6, and if you don't remember it, I'll give you a quick recap. We see Carrie for maybe like one of the only times, if not the only time, actually go on public transport. But the reason that she's on public transport is because she is rushing to open the stock market at Wall Street. So we really get a theme of investing in this episode. We see Carrie ring the bell. And she rings the bell because she's now started to establish herself as this really well-known author. She's a published author. She's really successful. And her magazine, the New York Star, is being listed on the stock exchange. After ringing the bell, we then see Carrie go for brunch with the others. And we get into a conversation about investing, which we will talk about as we go through our episode. But before we get stuck in, I would love to reintroduce our special guest, Sarah Glanville from eToro.
Hello, thank you so much for having me again. I'm so happy to be back here, and I love Sex and the City, so I'm very excited to get into this one.
Amazing. And just for anybody that may have missed our previous episode with you, could you just give us a little quick summary of what you do at eToro?
Yeah, sure. So my name is Sarah. I'm a senior account manager here at eToro, which means I deal with our clients. I look after our clients and help them when it comes to all things platform related and also the markets. So we get good insight on what's going on in the markets. But also I get to do fun events and podcasts like this today.
Thank you so much for coming back. We must have not scared you off the first time. Your insight is going to be so important in this episode because neither of us work or have worked in financial services. And this is the most like on the nose that Sex and the City gets about investing. And we've kind of discussed a couple of times how money's really like a big character. It looms quite large in Sex and the City, but the conversations about investing are really limited. And actually this one conversation that does happen kind of shows that actually for kind of really like successful, smart women, you can tell this was a pre-loud investing era. Let's just say that because there's not much knowledge there, but there's also like not much positivity there towards investing.
I think it's worth us kind of going around the table in terms of the 4 characters and how this conversation while they're at their brunch plays out. So I think the most positive that we get really is Charlotte. And Charlotte actually says that she has invested. She bought some shares in the New York Star, and she's done it off the back of her friend Carrie, which I thought was really cool when she said that. I thought, okay, amazing, because she's not only investing as a woman, and we're seeing this on the screen, but she's investing in something that she actually cares about. And I guess that is something that sometimes we forget you can actually do.
Yeah, definitely. I think investing in things that you support is a great way to invest too. So obviously with Charlotte, she's supporting her friend. She believes in the company. And of course, New York Star is where Carrie writes. So it's in kind of a long-winded way, I guess, just supporting a friend through it. And I think investing in what you know is really important too. So if you understand an industry or you understand a sector or a space, it makes more sense to invest in something that you know more about than something completely new.
And do you think that women are kind of maybe more likely to do that, more likely to put their money into things that they believe in or have like an emotional investment in? Is that too difficult a question? Or
No, I mean, I think just speaking from, I guess, my personal experience and what I, chat to my friends about when it comes to investing, people are, I think I get more questions regarding, the ethics of something or if it's sustainable or, what the company stands for. I do find that maybe women do look into that a little bit more detail, which can be a good thing because I think being sustainable just means hopefully they're there for a long time and you don't have any ethical concerns about the investment then as well.
And has it become easier since you've been working in the space, do you think, to actually invest in a way that does align with things that you care about? Or is it still quite difficult to know what you're investing in?
It's definitely got easier. So for example, at eToro, we have an ESG meter, which is environment, social governance. And it kind of gives you a good gauge of how maybe ethical a company is. It kind of gives you details then about why they've got a certain figure. It's between 0 and 100. The higher number, the better for it. So I think it makes it even easier now to have a look through and be, does this align with what I want to invest in? And do they stand for the same things that I do?
That's so great, because actually, I am aware of like certain ethical investment funds, but there's still like quite a lot of question marks about where different companies sit on that scale. So I think giving them a score out of 100 is so helpful if that's something that means something to people.
Yeah, so it's really helpful actually to know that you can invest in a way that not only, I guess, supports your friends like Charlotte, but you can also do it in a way that aligns with your values, which I think is something that I personally really value being able to do. But next around the table, I mean, Samantha's input on this one is classic Samantha.
Yeah, it sleeps with the new guy in her building who is a trader who happens to have been giving like stock tips to every woman that he sleeps with, which is, I mean, I don't think insider trading is funny in general, but the scene is quite funny where he gets sort of busted. Yeah, I mean, we have to kind of jump to our own conclusions about Samantha and investing, don't we? It feels like the kind of thing she'd do, but I think she also, because she has her own business, like she has shown sort of, if this isn't like too twee, she does express like investing in herself.
Yeah.
She's obviously put a lot of money into building her own company.
Yeah. Yeah, and I think Samantha, we know, like you say, has got a lot of business acumen, and that can be really helpful, I think, in terms of understanding businesses when it gets to investing. Because do you think sometimes there is that barrier of knowledge that can stop people from starting investing because the business world can seem quite overwhelming sometimes?
Yeah, definitely. And I do think there's a factor of sometimes you're looking for a good investment, but you look so much and it's hard to have a certainty, or, it's taking the plunge. The first step's always going to be the scariest. When I reflect on Samantha as a character, of course, she's, I think, maybe the funniest one to watch during the whole season. But when I think of what I think she would invest in this kind of day and age, of course, this was filmed quite a little while ago now, I think she would be kind of ahead of the trends, because I think she does have business sense. Maybe she's not completely equipped in the market side of things.
Yeah.
But I reckon she would be able to get ahead of the trends. She would be able to spot them.
Yeah. So like nowadays, maybe she'd have spotted that like AI was up and coming and started to invest in AI companies 10 years ago.
Oh yeah. She would have got Nvidia when it was listed 5 years ago, 10 years ago or so. I can imagine she's been but I could see her being a bit of a risk taker, but in a very positive light.
Yeah, that's so true, actually. I never thought of that. But actually, when you look at what kind of profile maybe each character has, then she definitely strikes me as someone that's more willing to take a bit more risk, which is a really stark contrast, I guess, to what we see with Miranda, who says in this conversation that she no longer invests because it's too volatile for her. And watching that as people that are really supportive of women investing was a bit of a moment. It's quite sad really to see.
Yeah, definitely. And I also think because she's kind of depicted as the smart one, or
this is exactly what I was going to say.
And I think as a viewer, then you go, oh well, if she's so smart and she's not investing, maybe I don't, which is, I guess, the concern there. But when I think of what I think she would actually invest in, she would go for low risk options.
Yeah.
She would be ETFs or maybe a bond or something, which is steady and slow, but right on the end of the risk spectrum. But I couldn't see her just keeping all of her cash in a bank account either.
No, she does seem too switched on for that, I think. And she's so smart with so many of the other decisions that she makes. I mean, she
Maybe
has
not
to
in
be,
love.
Depends whose side you're on. But she obviously has to be pushed into buying a house in Brooklyn, but like, you cannot imagine what that brownstone would be worth.
Yeah,
now.
that will have been a good investment.
That would have been
That
a good
would have been a good
investment.
investment.
But similarly with Samantha, like, she does make a big investment in like a big risky investment in her flat in the meat market, and then in the meat market. No, that is appropriate for Samantha, but potentially like under in a different context. But she, in the meatpacking district, she and we have to like be careful with this storyline, because actually there's quite a lot of sort of like not very nice transphobia in there, which I don't think is consistent with Samantha's character at all. And there is a transphobic slur in this episode that we should definitely sort of like warn people about. But in this episode, she is bemoaning the gentrification of this area that she bought an apartment in a couple of seasons previously, and she is part of that gentrification.
That's what I thought was quite odd, is that it's like, you're not part of this that you're complaining about, really? Like, you're definitely part of this gentrification wave. When the Pottery Barn's opening, it's like, that's surely something that she would be quite happy about, rather than that. And seeing her value of her property going up as the area becomes gentrified. But
I think you see that with quite a lot of people, of like, I'm different because I was here first. Like, I was on the first wave of gentrifiers. Thank you very much.
So it doesn't count. Yeah. Okay, just a quick pause for a word from our sponsor, eToro.
You know how in Sex and the City, the girls could talk about literally anything? Sex, breakups, babies, body hair, nothing was off limits.
They even talked about money sometimes, but weirdly not really investing or growing their wealth. Like, why were they talking about their date's net worth, but never their own?
That's why we love eToro's Loud Investing initiative. It's about making investing a normal part of the group chat.
Not just a thing that men talk about while they're at golf.
We want money conversations to feel like brunch with your best mate. Honest, fun, maybe a little bit chaotic, but super helpful and real.
Exactly. And with eToro, investing feels social. You can learn from others and build confidence without pretending that you've read The Economist from cover to cover.
So if you've ever felt like the odd one out in money conversations, eToro is your invite to the table.
No shame, no jargon, just women investing loudly.
This episode of Help Me I'm Poor is sponsored by eToro. Search Loud Investing with eToro to find out more and join the movement.
And just so we're clear, everything we talk about here is for information and education only. It's not financial advice, personal recommendations, or an offer of any kind. Always do your own research.
eToro is a multi-asset investment platform. The value of your investments may go up or down, and your capital is at risk. That is quite a big moment of her buying that flat. And I think that you're right, like, that kind of demonstrates that maybe she would be more willing to take a risk.
Yeah. Just on the point about Miranda and her comment about volatility again, is this something that in the work that you do, you see come up as a concern that is legitimate for a lot of people, and particularly women? Do you think that volatility is something that women are more concerned about?
Yeah, definitely. I mean, in general, I think it's always worth to have a look at volatility, and in particular risk, and what risk you have tolerance for and what risk you don't. And I think maybe the reason why a lot of people maybe don't invest to begin with is that maybe they've heard horror stories, or they've seen maybe different films of how they think investing goes, and it's, up and it's down and it's up and it's down. There is always going to be somewhat volatility, but you can have a lower risk options, and there are lower risk options out there. It's interesting because I was reading an article from the Financial Times, I think it was about a week ago or so, and it was talking about what risk is and how we perceive risk, and how maybe most of the time it's perceived more negative than anything.
Yeah.
But on theme with just, dating, for example, that usually involves taking a risk, or, entrepreneurs, they have to take a risk. So investing, there are risks involved, and I wouldn't pretend that there wasn't any risk at all.
Yeah.
But there are different options of risk. There's going to be higher risk assets and, investment choices, and there's also going to be much lower ones. So there is a variety there, and it does really depend on the individual and I guess your circumstances at the time. To what you're willing to take on.
Yeah, and actually that point is something that Carrie makes in the episode, is that she's drawing the comparison between investing and relationships for her column. And it is a really good point, because every time you go into a relationship, ultimately you're taking a risk. And the more you invest in a relationship, then actually like the more risk there is almost in a way. And yet we do that quite willingly in society. And yet when it comes to money, it's almost like there's this new layer of fear or kind of conservatism about taking that risk. But maybe we need to look at it in much more of a similar light, that you've got to take some level of risk to potentially get some reward.
Yeah, no, definitely. I think, no risk, no reward is a bit of a catchphrase that I've heard before, but I like the way that Carrie uses it when it comes to dating, because it's interesting because you're risking your time, you're putting your time and your effort, and it could end up being the love of your life, or alternatively it could just be another traumatic story to add to the list, and that's the risk involved in it. And I think I like the way that she uses dating as kind of an analogy for the markets in that way.
And if we're going to have like a bit of an educational moment, Sarah, for our listeners, what if we've got listeners who are like a bit worried about the risk, I think we know that there are ways to mitigate that. So would you mind telling us about kind of, I guess, if you had a client who was worried about risk, aside from kind of choosing lower risk stocks, is there anything else that you would recommend in terms of like how they spread them out, time in the market, stuff like that?
Yeah, sure. So there's different options. I think first things first is if you're a new investor, I would recommend doing some research using the virtual account. We have these virtual accounts with virtual money. It just shows you how the market moves. You get a little bit more used to it. Second of all, I would also suggest that, take away some of the psychological barriers of it. Having there's a saying of don't try timing the market beats time. No, sorry. Time in the market beats timing the market, which essentially means over the long term, if you go for something safer options like the S&P 500 ETF, no one's ever lost money over a 20-year period of time. It will fluctuate, but having time is a really valuable asset, and time on your side can really help in that regards. And then on the back of that, you want to spread out your risk too, which is essentially diversification. My mum would say, don't put all your eggs in one basket.
Yeah.
So, don't put everything all as in one. Spread it around different geographies, different sectors. It just means that if one goes badly or one has some massive news announcement, should we say iPhone started exploding and you only had Apple stock, you'd be in big trouble.
Yeah.
But if you also had different areas and different stocks and you've spread out your risk, that's when diversification can really help you out there. So when looking at risk, diversification is very much key.
And do you think as well, like there's a tendency sometimes to maybe overcheck how your funds or your investments are performing? And is that something that can be like unhelpful?
Yes, I mean, definitely. I really fell victim to that. I used to check it every 5 minutes or so. I had notifications on every time it moved, even by a cent. I wanted to know.
Yeah.
But sometimes it is obviously good to continually monitor your investments. But I think watching it day-to-day fluctuations can sometimes have a bad psychological effect where maybe you try get out and then you get back in, or you get back out, you get back in. And that's when time in the market beats timing the market. So, it definitely can work in your favor, but also in the majority of the cases, I'd say you don't want to be obsessive over it.
We're talking here about investing in the stock market, and that's the context really that we're talking about in this episode as well. But Carrie does make the comment that she likes her money where she can see it in her closet, which I do appreciate. And is there an argument, do you think, as a Sex and City fan, that Carrie actually has made some very good investments in some of her kind of high-end fashion items? Because I do see a lot of conversation around certain brands that they're really good investments, things like your Birkin bags.
Yeah, that's exactly where my brain went. I went Birkin bags immediately, because I think you can see some of them get sold in auction for hundreds of thousands, even up to millions.
That's insane.
Yeah.
It's really insane.
Somewhat an investment decision. You could argue that she's quite a good investor in that sense, because she's picked items which will last a lifetime, hopefully, good quality.
Yeah.
Instead of buying, I think she said at one point she spends £40,000 or dollars even on shoes.
Yeah.
I think in this today, when I think of what she would invest in, I definitely think she would be on the trendier items in terms of stocks. She probably bought some Dior stock or LVMH, which is Louis Vuitton, Moet Hennessy. But yes, I think there is a case to be said, that it is just maybe even slightly riskier though, because I think one of the episodes, a dog eats her shoe or something. That's your investment gone.
Yeah. That is true. Those like alternative asset classes, anything that's like involves a physical item, like you could lose it. Or like it could get broken, or someone's dog could eat it, or whatever. And I do think that sometimes maybe like puts people off. But similarly, you can find something that's then worth a lot of money. This is not exactly the same thing, but a friend of mine found a hard drive with a few grand's worth of Bitcoin on it.
Really?
Yeah. And then like the week after they sold it, the hard drive stopped working.
What?
Yeah.
That is such good luck.
It was really, really good luck. It was like almost like presented itself to them, being like, use me before I.
Wow.
Yeah. Thank you so much for coming and sharing all of your wisdom and knowledge with us again,
Thank you so
Sarah.
much.
It's been so great to have you.
Thank you. No, thank you so much for having me. I've absolutely loved it.
We would absolutely love your feedback on this episode. Please do drop us a comment on Spotify, rate us, give us a review on Apple Podcasts, or come into our DMs on @HelpMeOwnPodcast, Instagram, TikTok, take your pick, choose your poison. And you can find us on Substack as well now. We will get a weekly newsletter telling you about what we've been up to, some extra takes on stuff like this, and anything that's been in the news. And yeah, I think that's all we've got time for. We'll see you next week.
See you next week.
Bye.
Bye.